the majority of people on the internet are also on a social network, right? Or a messaging service. And, obviously companies, the Mag 7 now, the 7 largest companies in the world, most of them didn't exist 20 years ago. Both Google and Meta, kind of got built on social media and obviously the internet. Microsoft has sort of like pivoted its ship. Bill Gates had the famous memo in 1995, we are going to die as a company if we don't embrace the internet and own it. So I've just watched these sort of new technologies go from being laughed at to being world dominant, and I now see the same thing happening with Bitcoin and Web3 and crypto, which is still in the first they ignore you, then they laugh at you, then they fight you, then you win. On a regulatory stage, I think we're moving to now you win. Mm-hmm. But on a global adoption, we're still somewhere in the laugh at you and ignore you phase, because we only have 5% of the world, having even $1 of Bitcoin, and maybe 6 or 7% having, any kind of crypto. Mm-hmm. And that will be, if it follows the path of mobile phones and the internet and automobiles, that'll be, 80% in 2 decades or so.
Very excited today to welcome you to another episode of the Building a Better World podcast. Today, I'm honored to be joined by a good friend, Michael Turpin, who is the Godfather of Crypto, as named by CNBC. He's a serial entrepreneur. He's an advisor. He's an investor in crypto and AI companies, and he's the author of Bitcoin Supercycle. And in addition to that, he's the Chief Executive Officer of Transform Ventures. So happy to have you on today, Michael.
Delighted to be here, Hrish.
Thanks so much for all that you've done over the years for the industry, your thought leadership, your advisory of so many of the companies and entrepreneurs in the industry. Really appreciate that, and really, really happy to have you on. Would love to hear about your background, maybe as a starter question, to learn how did you get into the industry? What did you do before? Get kind of a picture of who Michael Turpin is.
Sure. So I grew up in upstate New York and got 2 younger brothers who are both techies. I really was sort of the arts and letters guy. I went to journalism school and then got my master's degree in creative writing. I've been a published poet. So I kind of came from the wordsmithing side, but I was always interested in technology, the earliest, PCs and then the internet. And I say I've got the blessing and the curse of seeing things early. I get excited when I see something I think is going to change the world. Going all the way back to the personal computer, I was like, well, this is interesting. And most of these new technologies are greeted at first with just like massive skepticism. There was a lot of stories when the personal computer came out in the 80s. Really, I guess initially the 70s and then the 80s. It's like, why on earth would anybody need a computer at home? You have one at work. Have your wife store recipes on it. Nobody had ideas that they would use for gaming, that they would use it. Now it's not like, do you have a computer? It's like, how many computers do you have? You can't live without it. And that was, of course, before the bandwidth where you were able to get multimedia and not just have a spreadsheet. Yeah, that was sort of my start. I obviously learned some tech from my younger brothers. My middle brother, Mark, went to MIT Artificial Intelligence Lab back when Minsky was in charge. Wow. And, sort of did programming in Lisp at some of the early AI companies. And then my youngest brother got degrees in comp sci physics and I think electrical engineering. So he's now an app developer. And so I'm sort of a non-techie guy, but I've obviously been fascinated with consumer technology. And then that sort of, grew into fascination with, whatever I thought was going to change the world. And so started out with computers. And then when I saw the internet, my brothers were already on the internet at university. And, but to me, it was like when I first heard about the internet, it was like, oh, this thing that you go to university for. And it's like these weird things like Archie and Gopher, FTP transfers, and I didn't really see any consumer applications. I remember there was people on CompuServe telling me this is going to change the world, and I'm like, this is slower than a fax machine, right? How's this going to work with a 300 baud modem? The lesson I think over time is that disruptive technologies, you can't look about where they are now, but where they're going. Usually the tipping point is when the GUI gets correct, right? When the technology keeps up so that like the early visionaries see the future. So the skeptics see the present and say, this is garbage, right? So the internet really excited me when I first learned about it. Particularly, I got super excited when I learned about Mosaic, which was the first web browser, right? And so the internet goes all the way back to the 60s as the Defense Project. The web started in 91 with, Berners-Lee. And then the ability to kind of browse it on a computer, a PC, not like in a university setting, was really Mark Andreessen when he was a student at the University of Illinois Champaign-Urbana, working under Larry Smarrs, who was sort of one of these forgotten people in internet history, because he basically was just wonderful at getting big government grants. He got the grant to do the Apache server, and then he got the grant to do the web browser. Andreessen was one of his star students, along with Eric Bina, who actually wrote the code, another forgotten hero of the internet. He actually wrote the code for the original Mosaic browser, which then ended up becoming Internet Explorer when Microsoft bought Spyglass from the university. That then he followed him to go and start Netscape, which then ended up becoming Firefox and Mozilla. And then, pretty much I think those were responsible for writing about everything except for Chrome. And so the oh my God moment to me about this is going to change the world was when I downloaded the Mosaic browser. I mean, literally, from Mark Andreessen's dorm room, pretty much. You'd go to the server in the university, and I'm like putting it on my computer. And instead of it was only in recent years that you'd moved from sort of a sneaker net, moving your floppy disk from one computer to another, to like a local area network. And you'd read about wide area networks in larger buildings and campuses. And so I was familiar with sending a file from file D to file, J on someone else's computer in a LAN. Here you type in www, .louvre.fr, and you're sending a file or viewing a file from the Louvre in France. And to me, clicking a couple letters and all of a sudden being in a server in France, that to me was world changing. And then I did research on it and, kind of saw how it was built as even back then, it was kind of the original decentralization, right? It was the ability to have a set of computers that, if you had 1,000 computers and, it was a defense project originally. If 90% of them got blown up in a war, you could still connect among the others in a network. And so that to me was like, this is going to change the world. I should change, everything I'm doing and just work on the internet. And that was pretty much what I did in the 90s. And then bubble went up, bubble went down, technology kept growing, but just the sort of investor perception, which got me ready for the crashes and the bubbles in crypto, seeing it in the internet and the dot-coms. It was first the dot-com bubble and bust, and then it was the unicorn bubble and bust. And so, bubble and bust cycles are not new. I mean, they go back centuries. And so once you learn them, then you can own them, right? And that's a lot about what the book is about for the Bitcoin Supercycle. But, with the internet, when that crashed, and you had 9/11, all sorts of horrible things on the world stage, that's when the seeds of social media came up. And so I thought that was another, oh my God, this is going to change the world. And again, huge skeptics, why do I care about what you had for breakfast, and very few people using it first. And now it's the majority of people on the internet are also on a social network, right? Or a messaging service. And, obviously companies, the Mag 7 now, the 7 largest companies in the world, most of them didn't exist 20 years ago. Both Google and Meta, kind of got built on social media and obviously the internet. Microsoft has sort of pivoted its ship. Bill Gates had the famous memo in 1995, we're going to die as a company if we don't embrace the internet and own it. So I've just watched these sort of new technologies go from being laughed at to being world dominant, and I now see the same thing happening with Bitcoin and Web3 and crypto, which is still in the first they ignore you, then they laugh at you, then they fight you, then you win. On a regulatory stage, I think we're moving to now you win.
Hmm.
But on a global adoption, we're still somewhere in the laugh at you and ignore you phase. Because we only have 5% of the world, having even $1 of Bitcoin, and maybe 6 or 7% having, any kind of crypto.
Hmm.
And that will be, if it follows the path of mobile phones and the internet and automobiles, that'll be 80% in 2 decades or so, and that's exciting for a lot of reasons. So I guess that's sort of my short history.
Yeah, and you've done so much in this space over the years, given your long history in this space, including founding BitAngels, which I should also note. And you've mentioned some of these changes that have happened in terms of the perception of the market. What do you think are some of those key changes in terms of the market sentiment as well as behavior by participants over the years? And how have these changes influenced your theories? And maybe we can go into some of those theories as well.
Now we'll go up to
Yep.
to crypto. So
Yep.
obviously, I think it's sort of the skepticism of those other markets that I'd mentioned. I mean,
Mhm.
I remember reading a piece in Newsweek in 1995, laughing at the internet and saying,
Mhm.
no one's going to ever read news on the internet when you can have a beautiful, shiny, glossy paper like Newsweek to do it. And it's a joke to think that anybody's going to go and buy products on the internet because my shopping mall down the street in Pittsburgh has far more sales than Amazon does globally. Well, that was then. That was 1995. 30 years later, Newsweek is out of business. Almost nobody's doing print anymore, and it's all on the internet. The largest, advertisers and media companies in the world are, Google and Facebook. Bill Gates once said that most people overestimate what they can do a year and underestimate what they can do in a decade. And so you have to have a longer time horizon to see where, things are going. And so just as the internet went from total skepticism in the mid 90s to sort of like loose adoption in the 2000s to sort of like massive growth in the 2010s. And now it's just like, what do you mean you're not on the internet? I mean, it's just like everybody's on it. I mean, it's 80% globally or whatever, maybe higher if you include, phones that have some internet capability, even if they're kind of dumb phones. And certainly you have access in your village or whatever to the internet. So we're right now at that kind of 5% tipping point for Bitcoin, and maybe 7 or 8% at the most. I mean, the most aggressive numbers I've heard are crypto.com surveys, which I think was about 600 and something million. So, but, it's interesting that the S curve of adoption, which happens in many other industries where, there's a great picture of Times Square, and I think the years were 1903 and then 1913. 1903, it was all horses, and there was one car off to the edge, and then 10 years later, it was all cars.
Yeah, I love that photo.
And so, and that's how fast it can happen. I remember as a kid, I mean, I'm old enough to have grown up with a black and white TV, and then all of a sudden, in a year or two, everybody had to rush out and buy a color TV because it was so remarkable. And it's like you had to keep up with the Joneses. If you didn't have a color TV, what are you, like, super poor? And then the prices, of course, went down. They were originally like a couple $1,000s, and you can buy a big TV for like under $100, right? Not a great one, but still, it's certainly the equivalent of better than what they were for $2,000, 40 years ago. So I think that's what's happening with Bitcoin right now. And the difference between, and this is again part of the thesis in the book, the difference between what's happening with Bitcoin today and the internet and mobile phones is that when they grew from 5% to 80%, a select number of winning players got rich. And those were companies, because you needed to make more servers. You needed to make more bandwidth. And so Cisco became a giant company. They were one of the biggest, massively growing companies that went public in the 90s. Microsoft, which is already a pretty big company, became the largest company, or one of the 2 or 3 largest companies, multi-trillion-dollar market cap in the world. Bill Gates turned it around and said, we can't be shrink wrap software. We have to be an internet company. Mobile phones, same thing. I mean, Apple became, the largest company in the world. I mean, going back and forth with these other Mag 7 companies, largely because they were able to go and find a phone that everybody really loved, right? Mm-hmm. Instead of just the cheapest one. And so I think that we're in the same situation now with Bitcoin and crypto, with one difference. it's not companies that are going to get rich. It's not like a mining company can go and quadruple their output because you still have a fixed number that you can mine every day. It's 450. It used to be 7,200. Now it's 450. Mm-hmm. After the next halving, it's going to be 225. After that halving, it's going to be 112. Then it's going to be 60 something. Then 30 something. Then 15. The last 40 years of Bitcoin production, from 2100 to 2140. Is going to be a total of 2.5 Bitcoin mined over 40 years.
Incredible.
Imagine the scarcity there, right? And then it's done, and then you just have no new Bitcoin. By then you'll probably be at the 80 or 90%, including abstracted. I mean, somebody buys an ETF, they're buying Bitcoin, right? Somebody. I don't know if you buy MicroStrategy, you're buying Bitcoin, you're buying stock of someone who else bought Bitcoin. You can't buy the same Bitcoin twice. Either way, they're all involved in the decision that's causing demand. Satoshi in the white paper clearly stated, and I put the entire white paper and I annotated in my book. I have a whole chapter devoted to that. So if you read my book, you've read the white paper, and hopefully with the annotations you understand it. But one of the key things that Satoshi said in the white paper was that as long as the amount of new Bitcoin being used, and obviously you have to buy it or hold it to use it, grows at a higher rate than the number of new Bitcoin mined, the price has to go up, because all of a sudden, if you're increasing your active user base by 100%, you're increasing your Bitcoin supply at 1% a year, so 4% over the time, the price has to go up. My sort of addition to that comment is, yes, that's true, but it doesn't go up in a straight line. And that's what confuses people. So if you look at the halving price as being as close as you can come to the perfect price of Bitcoin, I call it the Goldilocks price, because there's never been a halving that was the all-time high or the all-time low. You can look and you see that there are actually these pretty predictable cycles within I call them seasons within each cycle. So from the Genesis block until the final Bitcoin mined, it's 33 four-year cycles. I don't know if that has to do with the year of Christ or anything like that, but it's 33 four-year cycles. And the four-year cycles thus far have been during presidential years, and I think they'll continue perhaps for the next 20 years. You had a disruption when, kind of China really cracked down on miners. You ended up having it go from November of 2012, so 1 month short of the four-year cycle, to July. And so that's sort of kind of shorten the time frame because there was a lack of miners, and so that affects the difficulty level every 2 weeks, and it affects really the amount of time of the 10-minute blocks in every day. And so those are little things that Satoshi thought about. So far, it's gone pretty well in terms of being able to keep the difficulty going up to make the miners profitable and to still make sure that there's sufficient security on the network so that somebody's not able to go and just overpower it and take it over, have a longest chain. That's sort of the fundamental thesis. If you look at the halving price, the first halving was $12. Genesis, before the first halving, the first known price of anybody paying for Bitcoin was 1/10 of a penny. That was when Marty Malky, so I call him Satoshi's intern, sold 5,050 Bitcoin for $5 on PayPal. I'm sure he wish he had that back. That was in 2010. And then, the first halving was now you have more people trading. You actually had Mt. Gox up and running, and, the seeds of Coinbase and Bitstamp. You had, it was $12.70 at the first halving. 4 years later, at the second halving, it was $670. 4 roughly years after that, 210,000 blocks. At the third halving, it was $8,700, and 210,000 blocks roughly 4 years after that, it was 63,900. So those are pretty good steps up, right? If you're investing $12 in 2012 and it's $64,000 12 years later, that's a pretty good investment. Now, what happens is wild fluctuations within there, right? So you were able to go up as much as 100x from the halving, and then down as much as 85% that first year. That first 4 years after the first halving. So every single cycle so far has followed what I'm calling the 4 seasons of Bitcoin. And it's been diminishing returns every time and diminishing losses. And that will continue until the S-curve of adoption takes over, and that has to disrupt the cycle, because we were 100x the first halving, and then an 85% drop. And then we were 30x the second cycle and an 83% drop. So the drops did not recover as fast as the diminishing returns of the gains. The diminishing returns, the gains are more or less logarithmic, and the diminishing loss reduction has only been arithmetic. Mm-hmm. So again, 100x, 85% drop, 30x, 83% drop. Mm-hmm. And then should have been 10x the third halving, but because of the macro being bad, Joe Biden war on crypto, Elizabeth Warren, Gary Gensler, and then also just as you were having the Bitcoin summer run-up, you had a rapid rise in interest rates, which sort of, scared people off of all, kind of risk assets. And so we only went up 8x, which is still not bad for an asset class over roughly a little over a 1 year period. Mm-hmm. Most people would have that if gold went from 3,500 and went 8x next year. They'd be very happy with that. But that sort of established my kind of plus or minus 20% of what the logical number should be. And so with 100x to 30x to 10x, the next logical number in the sequence, since we've had sort of a linear growth that's mimicking the growth of the internet, should be 3x. So 3x the halving price would put us at about 193,000 plus or minus macro. So if we end up having bad macro, meaning there's still fear and loathing over the tariffs, and the fear and greed at the end of the year is still like a negative sentiment, and everybody's worried about the stock market crashing in recessions, and nobody's really thinking much about buying Bitcoin because they're too afraid. Then we're going to have a hard time getting above 150K. On the other hand, if it's neutral macro, I think we will get near 200K, but not quite get there. And if it's positive macro, which would mean that the global situation is sort of like kind of built in. Okay, there's some tariffs, and okay, it's not as bad as we thought, et cetera. We don't have World War III right now. And, you're used to Trump just doing crazy things every now and then. Mm-hmm. But they've already come through with the Genius Act for stablecoins, which has allowed much more of the world to legally have wallets, including Americans, to sort of not feel like this is some crazy thing to have a wallet. And I think that'll ultimately lead to Apple and Amazon having a wallet where you can pay in stablecoins, whether it's the Amazon stablecoin or the Facebook stablecoin or the Apple stablecoin, or they're just adopting USDC or partner with a bank, or the law says they have to actually partner with a bank or fintech to create a new one, which I think addresses a lot of the issues that came up the last time in the Libra hearings when Facebook tried, their stablecoin 1.0, which was, more of a basket of currency, wasn't really a stablecoin. So I think the stablecoin model that was, kind of pioneered by Tether has been the one that's prevailing. People want to have it, sort of transferable at will into something that is in a stable currency. And even though all fiat currency loses value, the U.S. is the best house on a bad neighborhood. So we're only losing maybe 4% a year versus Venezuela losing that in a couple of days. And so now that you have this global availability of stablecoins, I've said for a while that the future is going to be, particularly in the global South, that everybody will have a checking account, which is called their stablecoin, and a savings account, which is Bitcoin. Mm-hmm. And so they're able to go and say, all right, I know Bitcoin's the best store of value. The world will eventually get to that point. You may have some people wanting to store value in Ethereum or in XRP or whatever the flavor of the altcoin month is. But I think, you can't argue with it. Bitcoin has been the one that's performed the best over time. It's always had new highs before anybody else has had it. And, a lot of other altcoins may moon and then drop and then never come back. And that has never happened with Bitcoin, and I don't expect it to. Now, it will, smooth out once you're at 80% of the population. But before that happens, we're already 95% distributed. Mm-hmm. So we only have 5% of Bitcoin left, and that's going to take 115 years to distribute. Mm-hmm. So when, as I mentioned before, when the internet grew and Microsoft and Cisco got rich, who's going to get rich when Bitcoin usage is at 50%? Where is that new Bitcoin coming from? Mm-hmm. It's not new. You're not going to find new Bitcoin on Mars. You still have that same 450 Bitcoin a day, and that's going to be 225 and then 112. And so it has to come from current holders. Mm-hmm. And so the current holders are going to decide what's their price. If I got in at $1, am I happy getting out $100? A lot of people were, and they're kicking themselves. Am I, I got it in $100. Am I happy getting out at 100,000? Or am I sort of like, there's a certain percentage of people who got in early or who did get in late that said, I'm never selling. I'm going to basically just give it to my grandkids, and they're going to give it to their grandkids. And, maybe they need a few $1,000,000 from the one Bitcoin that I bought them, many years ago. Mm-hmm. And so that's the hodler philosophy.
Yeah.
And it's certainly done people well. If you bought 1,000 Bitcoin at the first halving for $12,000, most investors had $12,000, and you did nothing but hold, today it's 114 million. However, if you followed my 4 seasons of Bitcoin approach, which is you basically hold Bitcoin for 3 years and hold cash for 1, you would have about $5 billion. And that's not even picking the top to the number or the bottom to the number. It's basically getting with about 20% of the top, dollar cost averaging, and about 20% of the bottom. Now, I'm not including taxes here. This is like calculations for someone who lives in Dubai or, the Caribbean. But, basically, that's an amazing, so if you bought $12,000 worth of Bitcoin at, $12 for 1,000, by, selling it at the top, you would have sold it around $1,000, it went up to $1,200, and then bought it back around $250. It went down to $117. So all of a sudden, just 2 years later, you would have 4,000 Bitcoin. You hold that for 3 years, sell near the top, it went up to 20,000. You could get out at around 16,000, then went down to 3,200 if you got back in at 4,000, which I show in the book that it was easy to do that if you had the conviction. Now you're at 16,000, and this last one you went to quite done another 4x. You would have done a little bit less than, you'd have 60,000 Bitcoin. Mm-hmm. So 60,000 Bitcoin, if we end up hitting 200,000, it's $12 billion from a $12,000 investment. Anybody with that strategy and conviction could have done that. And that's a pretty remarkable number. Now, I don't believe that it's going to be 4x for the next 4 halvings, but I think you could be looking around 2x. And I think this time it could be 3x. So that's what my advice to people. If your goal is to have more Bitcoin at the end of the day, then that's the way you do it. And obviously there's layer 2 things now that promise you interest and things like that. But the only thing that's going to double, triple, quadruple your Bitcoin is knowing when to sell at the top and buy back at the bottom, just like in the stock market. And so that's one of the main lessons in the book. And then I can go into the 4 seasons of what they are.
I would love that. Yeah, I would love to go into more in depth on the 4 seasons and season we're in now, what's coming over the next years. And, I think you touched on how to kind of play that in terms of buying, holding, and selling, but would love to get more detail on that.
So I came up with the concept of the 4 seasons back in 2015, when things had sort of like bottomed and were starting to come back. And I saw that there was some repeating trends, and that's just gotten stronger every cycle. And so I felt that I really needed to write the book. I originally was going to call it the 4 Seasons of Bitcoin, and my publisher, Skyhorse Publishing, it's distributed by Simon & Schuster. They liked the title Bitcoin Supercycle, which was another part of the narrative. So then there's 3 things that the book's about. Number 1, it's not Bitcoin for dummies. It's Bitcoin for skeptical investors. Because I've been frustrated over the years telling investors going all the way back to 2013, Bitcoin's going to change the world and you really need to get a little bit. And they laughed at me. I spoke in front of the New York Angels, 100 and something people in July of 2013 when the price of Bitcoin was $66. Not a single person bought. And in fact, I was lectured at the end. I was lectured at the end that this was only good for drugs and prostitution. I should run away as fast as possible before I'm arrested. And at the end of the decade, they basically said, yeah, we really missed out on Bitcoin when they did a little poll of what were the biggest regrets of the 2010s. And so this is the reason why people miss out is they don't read the white paper. They basically will ask a trusted professional, meaning usually their stockbroker or their banker, who basically is conflicted because they're not allowed to sell this, and they're trying to sell you the latest stock they're shilling or the whatever latest investment they have in their kind of sales kit. And so you're not getting an opinion of someone who's either educated or impartial. And so that's number 1 reason I wrote the book. I show the value proposition, why it's been the best performing asset class and why it should still continue, even with lower annual returns on average, to still beat gold, silver, stock market, et cetera, pretty handily for at least the next 20 years. Maybe after 20 years, we'll smooth out a little bit, but I still believe that every cycle will be higher, even if it's just a little bit. Now, within the cycles, you have wild fluctuation, and that's really where my 4 seasons of Bitcoin comes from. So the four seasons, and they've become remarkably predictable. I think they're as predictable as sell in May and go away, and the Santa Claus rally has been in the stock market and other trends in real estate and cycles. Here you have four discrete behaviors within every 4-year cycle. On the day of the halving, the profitability of the miners goes from about 20% profitable to about 30% loss, because unlike when OPEC goes and cuts off drilling of oil, they get to turn things off one rig at a time. It's not like the oil fields just had half the oil disappear. That's what happens with Bitcoin. It's like as if the oil fields had half the oil disappear, and then 4 years later, half again, and then 4 years, half again. Mm-hmm. And so what happens is that no matter how efficient you are as a miner, unless you're making over 50% profit, which unless you got stolen electricity in the most recent year, you're not making that kind of price profit. You are starting to lose money. And so usually what happens is most miners, they'll have some cash reserves so they don't have to sell Bitcoin at the halving price to keep the lights on. And they use that time to move to a better jurisdiction, to go and replace their old computers for new computers. So they use that time wisely because it is the shortest season. Bitcoin spring, I call it spring because that's when the seed of the new cycle is planted. It's a completely new narrative for that 4-year cycle, and it's based on what happens with the new scarcity and then what things develop underneath that, just from the culture. Mm-hmm. And so you basically have that. The shortest it's ever been was 4 months, and that was after the first halving. You had the first halving at the end of November, and you end up having the price of the all-time high of the pre-halving cycle, which was $30, went from a tenth of a penny up to $30 when an article came out that said you can use Bitcoin to buy drugs, and people said, wow, that's going to be big, let me buy some. Mm-hmm. And then they couldn't get their money out of Mt. Gox, and people panicked and it went all the way down to $1. So you had that cycle was actually 3,000x, followed by a 97% drop, which is interesting. There was still a 3 and a 1 and a 3 and diminishing losses. So that was the shortest season. And I define, so it's easy to know when Bitcoin spring is. That's the easiest day to tell because it's on the calendar. It's basically, they have estimates of when it's going to be because it's every 210,000 blocks. Right now, they're estimating that the next one's going to be in late March of 2028. And as it gets closer, it'll be within a couple of days. So that is going to come, like it or not. And the amount of new Bitcoin is going to be cut in half from 450 to 225. Now, the second season, which is Bitcoin summer, arguably the most important season, happens the day that you pass the all-time high of the prior cycle. This is kind of my IP. I named it Bitcoin summer, and I found that 4 times out of 4 now, when you hit the all-time high of the prior cycle, things went off like a rocket ship. That's when you started your parabolic growth. It didn't go up in a straight line. 2 of the 3 halvings had double bubbles where it went. So in 2013, you had $12. It actually floated around there, actually went down at the start of 2013. It was around $11. And it just kind of like meandered around there. So Bitcoin spring is always flat until you hit the all-time high, and then it goes like a rocket ship. So it was pretty flat in January, February, and then it started going up a little bit. And when it hit $30, which is sort of, I think, around the end of February, I think it was right. So it was like December, January, February. It was not even 4 months where it hit $30. And as soon as it hit $30, within weeks, it was $250. And then it crashed in the summer. That's the double bubble, and all the way down to $50, and then meandered around. And when I was talking to the New York Angels, it was $66. And I remember calling that as the bottom because I thought there was just too much pent-up demand for it to come back, and I was correct. And it hit $100 in August. It hit $200 in September, and by the end of December, it was $1,240. And that's when all of a sudden, I remember literally in, I think, late October, Coinbase ran out of coins to sell. They literally had to shut down. They were kind of sourced from everywhere. We will have that. I can't remember that happening ever before. It will happen again because, if the demand grows faster than the available supply, the price is going to go up wildly. And it usually happens in summer because of the psychology. Retail has to come in to grow the market, right? You have 5% of the world that's existing, and the retail behavior, and this is not just crypto, it's stocks, it's real estate, it's everything else. When people see the prices going up faster, like, I am missing out on this freight train, I better jump on. And they jump on right before it crashes, right? And then all of a sudden they panic sell when it's about to crash on the other end. Meanwhile, the richest people in the world understand you do the opposite. The Rothschild family is, arguably the richest family in the world for a couple of centuries. I think it was Lord Nathan Rothschild, one of the founders, early members of the banking family, is the one who is credited with the quote, and I have it with the book, that, you must wait until there's blood in the streets to buy. Mm-hmm. The exact quote said, even if it's your own blood. And it's true. I mean, it's the best time to buy is when, they call it capitulation, when everybody's given up. It's not when it's just starting to drop. I mean, Bitcoin's on sale, 20% off from the high. No, that's not when you buy. You buy when nobody wants to buy. And that is the end of Bitcoin summer. And it's interesting that Bitcoin summer that starts with the new all-time high and goes up like a rocket ship and then adjusts if there's a double bubble. At the end, it goes up to highs much higher than anybody thought it was going to go. And there's FOMO and euphoria, and people are mortgaging their homes because they thought when it hit $1,000, it was going to hit $5,000, right? And of course, it didn't. It went down to 171. When it hit $20,000, people thought it was going to hit $50,000 and FOMO'd in. And when it hit $67,000, they were certain it was going to hit 100,000, maybe 150,000. It didn't. And so I think what's going to happen this time, if we end up getting over 200,000, people are like going, oh my God, it's going to 1 million this cycle, at least 500,000. And they're going to FOMO in and they'll be wrong. And the bubble will pop and then it'll drop. And I didn't used to believe until this last cycle really drove it in that the market demands capitulation. Mm-hmm. And it has every time. Because the worst thing you can do is slowly dollar cost average on the way down during Bitcoin fall. Mm-hmm. You just need to stop, store up your little, bag until it's capitulating and then start buying in. And may go a little bit lower, but you can usually recognize capitulation. Not as easily as the halving, that's on the calendar. Not as easily as Bitcoin summer, that's math, right? Oh, we just hit the all-time high. The all-time low, you don't know until couple months have passed and it didn't go any lower, right? Mm-hmm. But the signals are there. And some of the signals of the end of Bitcoin summer, which interestingly has been 9 to 11 months so far. Mm-hmm. And like Bitcoin spring, that number's been growing, right? Mm-hmm. And so I could see it being as much as 12 months this time. And then Bitcoin fall, which starts the day of capitulation. Bitcoin fall starts the day of the bubble popping. Mm-hmm. And so you don't really know it's popped until afterwards. And then it usually stays around the top and attempts recovery for about, 1 to 3 months. And then something happens where you're like, oh, no, we are in a bear market. And so this last time, literally, if you did not hit the top, which was November 10th of 2021, around 67,000, you had until like March to get out above 50K because there were a couple of attempts to get back in. Succession of horrors where you had, Terra Luna, and then that dropped the market below like 30, I think it was. And then you had, Celsius that dropped it back down into like the low 20s. And then that was recovering. Then you had FTX. And FTX dropped it down to 15. It was interesting. Nobody wanted to buy then. Even the whales were like going, yeah, it's going to go down to 5. I'll put my orders in. If the interesting thing is that if you didn't sell after Terra Luna and you didn't sell after Celsius and you didn't sell after FTX, you probably weren't selling. Mm-hmm. Right. And so the proof in the pudding was when there was one more shoe to drop in terms of bankruptcies that could have caused the panic. And that was, the division of DCG that was called Genesis Lending. They had a huge bankruptcy. I forget the exact number, it was in the billions. They all of a sudden were like, oh, and there's contagion and things are going to drop. Price did not drop. It actually went up a little bit. Why? There were no more sellers left. Mm-hmm. The whales weren't going to go and panic sell. They were waiting for the price to be, sort of steady at the bottom and maybe move up a little bit. The paper hands had sold a long time ago. At least they sold by FTX. And so that's capitulation. There are tools to find capitulation I talk about in my book. One of them is interesting is the whales tend to sell about 6 weeks before the top. Mm-hmm. And they tend to buy back in about 6 weeks after the bottom. And to me, when it started going up to about 18,000, that was a sign that like we're out of the woods. Mm-hmm. And so some of the smartest whales I know, went and made their biggest cash value Bitcoin buys ever at 18K. And obviously they're feeling pretty smart now. Yeah. So, and so that's basically Bitcoin fall is the trickiest one because it's hard to tell the bubble top and it's hard to tell the bubble bottom. But the calendar it helps a bit. The last two have been almost exactly a year. In fact, from in 2021, bubble top, November 10th, 21. FTX bubble bottom, November 10th, 22. Exactly.
Oh, wow. Okay.
12 months. 4 years early. Nobody wrote about that. I was surprised. 4 years earlier, bubble top, one that arguably you could have called, and I know a few people who did sell all their Bitcoin on this day, was the day that CME announced futures. And a lot of people are saying, oh my God, Bitcoin's going to the moon. Now you can go long on Bitcoin. And options traders, friends of mine said, yeah, and you can short it too. Now the Citadels of the world are going to do that. And if they can do it and make money, they will. I'm out. And they were right. And so that was December 17th. That was the bubble top of 19,800. The bottom was 32.32. That was December 14th, a year later. 3 days off exactly 1 year.
Okay.
And the first one was the longest time. The bubble top was December 4th of 2013, and the bottom of 171 was January 14th. So it was about 5 weeks on top of a year, but pretty damn close. So when you're looking to see when the bottom is, look at the calendar. If it's only 3 months afterwards, there's a lot more to go. And then the other thing is to look at the diminishing returns. If we had 97%, 85%, 83%, 75%, we're not going to all of a sudden have 10%. I mean, I think it was Bitwise, the CEO, just said, ETFs now means we're not going to have cycles anymore. We're not going to have wild movements. We're just going to be slowly going up. Yeah, right. Markets don't work that way. And so when we hit 200,000, 250, 300,000, whatever it is, I believe we're going to crash by about 2/3. That's about the right number. So, we were, if you just look at those numbers, maybe it's only 70%, maybe it's 60%, but somewhere around 66%, I think is the right number. So if we hit 150K, we'll go down to 50K. If we hit 300K, we'll go down to 100K. And that's when people are crying in the street and the media is like saying, Bitcoin's dead. It's already down 2/3. Idiots who bought them, what were they thinking? It's going to go down, to regulation will come back in. And what's interesting is we should be hitting capitulation right around the time of the midterms.
Interesting. Wow.
And so the Democrats win, they're going to it's all over. Elizabeth Warren's coming back in and she's going to make everybody put everybody in jail. Whatever. That's kind of the that's sort of the most interesting season and the one that you have to watch the most careful, which is Bitcoin fall. Sell at the top, buy at the bottom. That's the only time you actually make any movements in the 4 year cycle is Bitcoin fall. Sell as close to the first day of Bitcoin fall as possible and buy at the bottom. And then what's funny is there's this term that you hear widely called crypto winter, which seems to be anytime anybody's depressed about the price of Bitcoin. To me, winter is not when the price is dropping, it's when it's already collapsed. That starts the day of capitulation. So that in this last cycle would have started November 10th of 2022. And that's really technically when the bull market began. It's just not many people bought on that day. You could have bought, that was November 10th, 15,400. Guess where the price was almost 2 months later on New Year's Day of 2023? It was 16,000. It really hadn't moved up much.
Okay.
And so you had a couple of months to get back in. And the interesting thing is you usually have longer to get in at the bottom and still be within like 10, 20% than you do to have out at the top. Out of the top, the first time was really a short period of time that was over 1,000. But this last time you had a lot of days you could have gotten out over 60K. You could have gotten out when it went over 60K in April. You could have gotten out for like a couple of months in the fall. I mean, I think I had added up and there was something like 90 something days you could have gotten out over 60K. And you just have to go and look at fear and greed, the 4 year charts. What's interesting is on the fear and greed cycle, you want to be buying when fear and greed is at its most fear. And it only goes below like 10 once every 4 year cycle. And it's always a capitulation. And it only goes above 90 usually once every 4 year cycle. And so it's good to start dollar cost averaging out in the high 80s, perhaps, to be super cautious. And to start, you can still do fine buying in under 20 fear and greed. Those are remarkably accurate numbers. And it's based on the CNN Money research for the stock market, and it's been adapted to crypto. But there's 4 or 5 things that I look at both on-chain and sentiment to sort of like figure out when to buy back in and when to sell. But largely, it's hold Bitcoin for 3 years, hold cash for 1. And so the final season is Bitcoin winter. Bitcoin winter is the longest season. It's been about 18 months. And that's getting a little shorter every time, only because spring is getting incrementally longer. And I believe this time that summer will be a little bit longer too. Fall should stay about the same, about 1 year. So that means, I think maybe in 20 years, maybe winter is only 12 months instead of 18 months. That's when, there's a New Yorker style cartoon I'm sure you've seen where it's two lines. One says Bitcoin for sale, $60,000, and there's a line around the corner. One says Bitcoin for sale, $15,000, and there's no one in line.
Yeah.
And that's just human behavior. And I hope that people reading my book will realize that it's better to, sell high and buy low than to do the opposite. And, hodling is fine, but you do even better if you go and sell at least some of it. I believe the majority. Because again, if you know that that's likely to happen and you sell zero of it, you're going to be saying, damn, I could have sold the 200,000. It's like 80 now or whatever it's going to be.
Yeah.
And so that's sort of the lesson of it. And I spent a lot of chapters going over the fundamentals and some examples. I mean, one chapter per cycle. So I've got 5 chapters on the 5 cycles so far, and then 1 chapter each in Bitcoin spring, Bitcoin summer, Bitcoin fall, and Bitcoin winter. And so that's a pretty good chunk of the book.
And what's your perspective, and just a couple of last questions here on what's going on with altcoin season? I know that some people are saying, hey, maybe there isn't going to be an altcoin season this time. Can you explain your perspective on that?
Sure. There's always an altcoin season. In fact, there's usually a couple of them. And that's simply a rotation, right? Yep. Now, I think that if people are expecting a 2017 ICO market, like, oh my God, 100x is all over the place, they're mistaken. And that's largely because of the way that the market has changed. It used to be that you could go in, put Bitcoin and then later Ethereum into a non-KYC wallet and just simply say, okay, it's our ICO day. Just everybody from around the world, just put whatever non-KYC stuff you want into our wallet that's, sitting somewhere in Uzbekistan, and we'll have the smart contract issue your tokens. And then, it goes up 3 to 5x within a couple of days, and you have no restrictions on selling, and you've cashed out, made 2 or 3x, and then you go and put it into the next ICO, and you wash and repeat. And that was a great game while it lasted. And then, it completely collapsed on its own weight. There's a great piece that Melton Demirs wrote. I think it was April of 2018, and it was called Drowning in Tokens. And she talked about the way that she had started out, before she got into crypto. She was an oil and gas analyst. And she talked about limited partnerships, how, the real unbreakable rule is that you cannot create fresh demand by increasing supply. And that's what people fall for in the crypto markets all the time in altcoins. Bitcoin never increases its supply, right? I mean, at least it increases at such small level, it's always below demand. Whereas altcoins, whenever there's a bull market, everybody and their brother rushes into whatever the new narrative is. And, you can see this in the traditional stock markets too. The early pioneering internet companies like Amazon and eBay did well. And then you had a rush of venture capital to do Shmeebay, copy Amazon and all this. And they never went out because they were inferior teams, Me Too products, and, and they were priced at bubble prices, and they collapsed and dragged down the whole market with them. The early great companies came back. You could have bought Amazon after it went to $1,000. You could have bought it for $4 after 9/11. What a great investment. You make 1,000x on it almost. And so similar with Bitcoin always comes back. Not a lot of other coins come back. I mean, Ethereum still not reached its all-time high from last cycle. The only top 50 coin that has religiously, reached new highs fairly early in the cycle has been BNB. And it's, again, it's all-time high right now. But what happens on altcoins is they change narrative every cycle. So if you're going to be an altcoin investor for even part of your portfolio, I am, but it's a small part of my portfolio. I'm not a Bitcoin maxi. I call myself a Bitcoin preferentialist. I judge my wealth in Bitcoin, but I'm not going to go out there and say all altcoins are scams and they add no value. They are doing things that are innovative, the best projects that can't be done on Bitcoin yet, and maybe never have. It can be done. I don't know of any perps exchanges on Bitcoin native, right? There's a lot of things that Ethereum in particular created, right? And then now Solana's trying to, carve out a niche, and some other layer ones. And, the top layer ones have all done well. But they never, what alts typically do, and Ethereum in particular, Ethereum historically underperforms Bitcoin for like all but about 6 months of the cycle. Mm-hmm. It's always lower than Bitcoin at the bottom in a percentage basis. And it's usually is a little higher of a gain. If you were to go and hold Bitcoin, buy and sell the way I say, but take your Bitcoin and swap out some of it for Ethereum, mm-hmm. You'd probably be doing that about, 6 months before when the bubble is going to pop. So if you think the bubble is going to pop in October, November, you would have swapped out for Ether around maybe April, May. And guess what? Look at the calendar. Ether has outperformed mm-hmm. Bitcoin since April, May. Mm-hmm. And that's just this interesting just rotation. You still have a lot of believers in Ethereum. You still have a lot of fundamental value in the creation of the profits that they make on the fees, and and obviously now you have some of that with BNB. You get some of that with Solana that actually had more fee income than Ethereum. Those top tokens are the ones that actually can do well cycle to cycle. They just usually don't do as well as Bitcoin, and particularly if you price it in Bitcoin. And then most alts, they last one cycle, and if you don't get out, you're not going to ever get the same kind of returns because they're based on narrative. Name me a metaverse token that's done well this cycle. Mm-hmm. Name me an NFT platform site that's done well this cycle. Mm-hmm. The only one I can think of is Pudgy Penguins, and that's a new one this cycle. Mm-hmm. So typically altcoins, other than the top platforms, protocols, typically are one cycle wonders. And mm-hmm. so the fact that now you have all these lockups, the standard seems to be that you get either 0 or a small percent of TGE, then maybe you have a 6-month complete lock, sometimes a year if they're trying to appease the old Gary Gensler, gee, it must be a security, so we'll hold it for a year and a day. Distribution of the final tokens anywhere from 2 to 4 years after the TGE. Well, that guarantees that pretty much most of your tokens are going to be vesting in the bear market. Mm-hmm. And you're hoping that it comes back in the next bull market, and usually it doesn't. Mm-hmm. And so with that in mind, I think that there'll be fewer and fewer investors FOMOing into anything other than the hottest tokens of this narrative. So mm-hmm. this time the narratives have been AI, RWA, new dexes like Hype, and those are the ones that will still probably moon during the last rotation. And historically the rotation happens that when Bitcoin's flat, you have a little minor rotation, and mm-hmm. some whales will go, and also some, I'm sure, institutional traders will just see that it's flat, and they'll say, okay, it's flat. I'm going to go and take some of my Bitcoin, and convert it into Tether or stablecoins and buy some of the crushed alts and pump them and make 20, 30%. And then, when I think that rotation is sort of done, because they're usually not very long, move it back into Bitcoin and then ride that next wave up. And that's obviously, you got to have real sophisticated algorithms for that. I mean, the algo guys do well with that trading. My fund that I'm in the process of launching, which is for the Bitcoin Supercycle, mm-hmm. is only going to be on Bitcoin only. But my partners in it, Tradery Labs, they have a prior fund that basically did altcoins and Ethereum and everything else. And, you can do well if you have good signals and good discipline and a good strategy and beat the price of Ethereum, just like I'm looking to beat the price of Bitcoin. The difference is that alts don't have the same ability to sort of sell at the top, buy back in the bottom, and believe that they're going to recover. If you want to try that strategy in altcoins, you have to kind of sell the alts that are hot of this season at the top, and then hold the cash to buy the next narrative, not the current narrative. So in other words, if you were going and selling the ICOs in the top of the bubble in 2017 and took the cash and deployed it back into DeFi during DeFi summer, and then rode that up, kept the cash and then put it into early AI and RWA tokens, you would have killed it. But you have to have really good knowledge of, who are going to be the next Sui and who is going to be the next Bozo, right? And so there's a lot of ones that have strong narratives, strong teams, and just never make it. I have a few of those in my portfolio.
Mm-hmm. Yeah, it's hard to know. Kind of a final question. We covered a lot and you really provided a very comprehensive understanding of the market. Thank you for that and the evolution of the market and how we can kind of, come in and out based on the seasons. And, as you said, some of that's mathematical, others you can kind of look at the calendar. Are there things about what's happening as the market evolves, as institutions get in, as regulatory frameworks get more established? Are there things that you think that we haven't talked about that you want to kind of bring up that you may have in your book or that you see maybe coming in a future book? What is it that we haven't talked about that you want to say as a kind of a closing statement? And then as a corollary to that, if I'm a new Bitcoin investor and just getting into the market, as you said, most of the world is in that position.
Right.
What do they need to kind of think about as they think about the cycle?
If you figure that at some point we will have 50% or higher adoption of Bitcoin, perhaps in the next 20 years, you can extrapolate that the price is going to be much higher. I believe it'll be over $1 million within 8 to 12 years, and probably somewhere in the $5 to $10 million range in the next 30 years. Mm-hmm. And so, with it being a little over 100,000 today, that's a pretty good investment, even without doing the cycle trading that I recommend. I would say that if you have the ability to buy one Bitcoin today, you should do it, because there's only 1 million people in the entire world that have one Bitcoin. And yet there's 57 million millionaires, and eventually they're all going to realize they should have at least one Bitcoin. They won't be able to have one. There's only 21 million Bitcoin, and there's only 1 million people that have any Bitcoin, or more than one Bitcoin, a whole coiner, as they say. And so the vast majority of the ones that have zero Bitcoin now, which is probably 52, 53 million of those 50 something million, let's say it's 45 million or whatever. There's only maybe 3 or 4 million Bitcoin available, on between ones that have ever moved and ones that are in exchanges, and MicroStrategy is not going to sell to you. And I guess the ETFs will, but so you should buy it now if you can, and then you look to sell it at the top and buy back at the bottom, so that you can get a little bit more than one Bitcoin, or maybe you're only buying a half a Bitcoin now and looking to get it up over time. But you should buy some Bitcoin now, and then you should go and try to buy as close to a whole Bitcoin as you can when it collapses. So if it's under $100,000, or maybe even under $70,000. At the end of 2026, you should save your money now so you can buy a whole Bitcoin, because that will be a rare person in the world that owns a whole Bitcoin 20 years from now. And when you've got, half the world having it, 4 billion people, and yet you only have maybe 1.5 million people having one Bitcoin. I mean, that's pretty scarce. And I mentioned in the book that there's reasons why the global north and the global south want to have at least one Bitcoin. The global north, it's for their retirement, and they want to have one whole Bitcoin. And the global south, they won't be able to get one Bitcoin, but they'd like to have a tenth of a Bitcoin. They'd like to have, that's going to be their retirement. And so you do have a lot of demand and shrinking available supply. And so that's kind of my main thing there, is to, get in the game right now. If you're not in it, get off of zero. And so that's the main thing. And then, follow the cycles, and you can start with a tenth of Bitcoin and build it into a full Bitcoin over a couple of cycles.
Amazing. And, and where can we find you, learn more about what you're doing, Michael? What's the best way that our audience can, pick up the book? Is there other forms or other mediums that you're releasing the book under? Would love to hear about some of that.
Sure. So right now you can buy a hard copy on Amazon. It's Michael Turpin, Terpin. Mm-hmm. There we go. These green screens are annoying. At any rate, and so it's available on Amazon. Once in a while it sells out and it takes a couple of days to restock. But whenever I have a popular podcast, I shoot right up to number 3 in sales. It's hard to knock out the number 1 and number 2. And number 2 is typically Michael Lewis, because all of his books do really well. He wrote a book on FTX. They consider that a Bitcoin book. And the other one is the Bitcoin Standard, which is a 2018 book, which is another good book to read. I'd say read mine first, and then read the Bitcoin Standard, and then that tells you about the history of money and why fiat bad, Bitcoin good. and why it's going to become the new gold standard. I go into a lot more, sort of, and I referenced that book several times. It's a great book. It's written by a Lebanese economist. You can see how great parts of the third world have been decimated by, the fiat experiment. So, yeah, interesting. You should ask about other forms of the book. I am in the process, and I'm hoping to have it available by the end of the month, of having an AI version. My deal with my publisher is I have the rights to go and put up my own multimedia version. This will be basically an AI multimedia companion. So, it's still nice to hold the book, and you can get it on Kindle today as well. But right now there is no audiobook. My publisher has the rights to the Audible version of it, but they haven't commissioned it yet. But my AI book will basically read it to you in my voice through AI in 37 different languages. And so if you want to read it in Chinese, it'll be out in Chinese. You want to read it in Arabic, French, German, Spanish, it's 37 languages. And what it'll also do is it will go in and you can ask it questions, and it'll just pull up from the book. What will the high be in 2032? How many cycles will it be until we reach $5 million? It'll go into the book, rapid order, and find it. And I'm also updating the book with my tweets, with my blog posts, with interviews like this. Anything that's publicly available that's talking about the book is getting sucked in real time to the app. And so it's going to be about $39 for the ownership of the book on the app, and then it'll be and that'll include your first year of updates, and then it'll be like $9.99 per year to have an update. And every year I will write sort of a new kind of chapter length summary about what happened this year. Sorry, at least once per season, right? So once we hit the top, I will go and say, here's what happened, here's where I was right, here's where I was wrong. And I'm going to try to see if I can do it maybe once a year for each season. Okay, we just finished fall. Here's where we're at. We just finished spring. We're about to get into the next halving. And I will look to potentially update the hardcover book with some of this new content as we approach, some new 2028 edition for the sixth cycle and the fifth halving. And so it'll be an evergreen book in that way, because I just have to keep on updating the new chapters until the year 2140, and it'll be massive life extension if I'm still around then. Otherwise, AI will update it for me, I guess. And so that's kind of that. And then I've been looking at doing a second book in the series that will be not just Bitcoin and crypto, but it'll also be the combination of how AI plus robotics plus life extension plus crypto is going to fundamentally change the world and society. And I've had the title for a while. Every time I outline the book, the world changes. And so I have to, just like I picked putting this out right before, right after the halving and before Bitcoin Summer to prove some of my points, I'm trying to figure out how long before AGI comes out that I put this book out. So I'm going to probably start writing it, kind of in 2026 and see if I can get it out either end of 26 or 27. And I have a great title. It's called Pandora's Blocks.
Oh, okay. Wow. Yeah, I can't wait to, that's going to be amazing as well, to start seeing that future come alive through that book. And I love the new medium that you're coming out with. Thanks so much, Michael. Really appreciate all the time you spent with me today and our audience here about the work that you're doing, the inspirational education that you're providing all of us in this space, and really appreciate it, and looking forward to sharing more about your future book and what we're doing with SuperWorld, being able to share more about what you're building in general in this space. So thanks so much for the work that you do. And again, it's been a pleasure having you on the Building a Better World podcast.
Same here. I'm at Michael Turpin on Twitter. That's probably the easiest way to get some of my updates. Obviously, I do a lot of stuff on YouTube. I'm also on LinkedIn. I do, answer, say why you're contacting me, not just like boom, I can't tell people I don't know. And then also Bitcoin Supercycle.org is where I'll be releasing the book. It's an app, it's an AI app that you'll be able to buy it through a company called Hollow.
Thank you. Amazing. Looking forward to that, and looking forward to having you on again soon.
Well, we'll talk after we hit the peak, 200K.
Amazing. Thank you, Michael.
All right.
Talk
Thank you.
soon. Bye.
Bye.